Bitcoin remains stagnant as the bulls and the bears fight over control. In this video, we're going to be jumping down into the Bitcoin technical analysis, taking a look at what I think is likely to happen next based on the formation and patterns that we see inside the charts. As I get into the video, if you find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe. Tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, guys, you are missing a trick. Check it out, linked in the description below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. We actually run a few different competitions down in the Discord server. We have our weekly trading competition with BitGet. We've got some competitions running with BitGet on a much bigger scale at around $10,000. We also have some with 𝗕𝗄𝗃 as well. So if you're a trader and you're looking to kind of take advantage of some of the sign-up bonuses of these other platforms, specifically with things going on with Binance and Coinbase, you might be looking for a new platform for spot trading and leverage trading and so forth. I use BitGet for all of mine, 𝗕𝗄𝗃 occasionally from time to time as well. All the links are obviously in the description below, but also more details are found in the Discord server, so do check those out, or if they are of interest to you. Let's just jump right down into this video for the technical analysis on Bitcoin, right? Because Bitcoin's being a little bit stagnant. It is basically just kind of ranging at the moment, and this is basically a bit of a battle that is going on between the bulls and the bears, where they're trying to determine whether or not we're going to see a big surge to the upside as the bulls take control of the situation, or whether or not the bears are going to control the situation and take us down a little bit deeper. Now, following on from yesterday's video, my expectation is that we will eventually move down to this fair value gap, and more specifically this yellow box range at 25,711 to about 25,950. Okay, it would be, in my opinion, that this is a big kind of three-wave corrective structure that takes you down here. But even outside of that, if I just collapse this box down, you can see this green box. This is a fair value gap that was created from imbalances in the order book. So essentially, that order book imbalance where large orders have come in for buying hasn't been met by any sufficient selling pressure, so price has to go to where the sellers are, which was happened to be slightly higher in the price chart. And when you see these fair value gaps, typically speaking, price likes to come back down and fill them all out. I can go ahead and just rewind time here a little bit. And if we take a look at this area, you can see that you can see these 1, 2, 3, 4 fair value gaps here, right? And as I start to kind of play these candles out, you'll start to see how price will move down and fill out these fair value gaps. Price likes to fill the fair value gap. Doesn't always happen. Sometimes they do get left behind completely. And in other times, they basically don't even last more than a couple of moments. As you can kind of see, there are multiple fair value gaps appearing here, and they get filled out very, very quickly. Sometimes they get left behind for days, sometimes they get left behind for months. But as you can kind of see here, we filled out 3 of those 4 already, and the next one isn't that far from where we are right now. So the expectation here is that eventually price will move down towards this low range, where we'll actually end up filling out that last fair value gap. What happens afterwards will be very interesting. Can we surge upwards? Will we surge upwards in any meaningful way, or are we actually just going to continue a slow descent to the downside? Because there are some large fair value gaps on the larger time frames. Let's go ahead and take a look at those. Okay, so if I bring this up to our daily time frame, I've got these drawn out already, so you can kind of see we almost filled this first one. This first one was 25,167 to 26,578. You can see prices almost filled it, almost coming down to this low side, but it hasn't completed it just yet, and therefore we are close to doing so. We should keep an eye on that one. We can also see this next fair value gap on the daily chart at 22,150 to 23,976. That is followed up with one slightly lower at 20,686 to 21,813. And then down here, the last one on the daily chart, 19,117 to 19,888. Now that's on the daily time frame. Take this to a weekly and we end up with 2 fair value gaps of importance. Okay, so on the higher side, we have this first fair value gap on the weekly time frame. This comes in at 22,602 to 26,000 26,601. Underneath that, there is another fair value gap. This one is unfortunately incredibly bearish, taking us down to 17,127 to 20,407. Now, I'm a believer that we are going to be experiencing a new lower low. I've been talking about this for quite some time, and I look at this structure unfortunately in two different ways. We can look at it as a W, X, Y, X, and Z, which I'm starting to feel doesn't fit best. And we could be looking at this as a giant A, B, and we've got some further downside into a C wave structure. Okay, now again, people are really wanting to jump on the idea that they're in a bullish market. I would love that. I'm just not seeing the data that supports it just yet. So until we see that data, I'm still going to be really conservative here and be optimistic when times allow, and pessimistic when the data is suggesting that I should. And right now, it's not giving me the most amount of confidence to think that we're in a bullish market. As much as I want that to be the case, I just don't think it is. And so, with everything that's going on, Binance and lots of different banks basically preventing cryptocurrency exchange deposits now, they're on the increase. We're going to see a lot more of that. We've seen some restrictions here in the UK, like I can't invest more than 3,000 in a month, for example, and even trying to onboard from the bank is quite problematic as well. They will force you to call them, and you'll have to answer questions and all these kind of things, all this nonsense that you don't need to see. There are of course ways around all of that, but nonetheless, we're seeing issues for the adoption that is going to be required for large and or just regular retail investors to kind of onboard into the market. We will see some selling pressure, as I don't think there's going to be major restrictions on deposits from exchanges to your banks. It's only the other way, getting the money from the bank to the exchange, that seems to be the problem. And what we're going to see, in my opinion, is going to be a continuation of this pressure on the crypto market, right? And what we'll find longer term is that large institutional investors will not have those same pain points and will be able to invest freely. And as such, as price comes down, as retail investors do succumb to selling pressure, they will find it harder and harder to actually come back into the space, but actually quite easy to leave the space. They'll be selling ultimately losses, in my opinion, and the flow of Bitcoin will be flowing towards the institutional investors who will be buying it up cheap. This isn't anything new. This concept's been around for very, very, very long time, and we see it time and time again repeating. I'm not saying that history is not repeating itself. I do believe history is repeating itself, but it's not in the idea or in the way that a lot of people are articulating. They think that because we've had a Bitcoin halving event, X amount of times before, that's going to be, the catalyst for the next bull market, and we're repeating ourselves in terms of the price chart. I don't think the price chart is repeating itself. I think the psychology of the people and the behaviors of the people are repeating themselves, and they're actually giving us two different outcomes, which is a first time because we haven't seen that before. Normally these things actually coincide, but this time around they are not. We have to consider that cryptocurrency hasn't really been through a recession before, and we've seen Germany come out, we see the EU coming out and acknowledging the recessions, and we only really need a handful of other countries to kind of start that ball rolling before the US will have no choice but to actually admit what is right in front of them. And as soon as that happens, I think we're going to see major pain in the space. And I could be wrong, but for the most part, these fair value gaps that we see in the price chart are an indication as to where price is more than likely going to be going. As I said, this is the weekly time frame. We can see here that there are two fair value gaps. If I zoom out of this, where else do you see a fair value gap? You don't. And this is because since 2018, all fair value gaps on our weekly time frame have been filled out, historically speaking, and therefore the expectation is that eventually these gaps that we see on this weekly time frame will eventually be filled. Now, if you do take this back much further, more towards 2012, 2011, then you will see some fair value gaps at those incredibly low levels. And my expectations are that they will not get filled. And this is simply because price has moved and gravitated so much further away from those gaps. It's going to be incredibly difficult to have that much selling pressure that pushes the price into those low ranges. There was a totally different dynamic way back in 2011, 2012, where ultimately there was a very few people involved in Bitcoin and very few supply. Unfortunately, now we have a much significant circulating supply than we had previously, and unfortunately a lot more people. This means that getting the price down into those low levels is incredibly unlikely. There's a lot more eyeballs on BTC these days, and as price comes down, buying pressure is very, very intense. So it's unlikely that we're going to fill out $300 Bitcoin fair value gaps. So nonetheless, we should acknowledge that they do exist. And also, if we come on over into our daily chart over here, and this one is our CME futures. And on this particular chart, we can see two CME gaps that are yet to be filled. And we do see one up here at 34 to 35,000, and we see this one down here at 20,000, right? And so if I actually click into these, you can see it's 20,330 to 21,110, and then up here we have 34,455 to 35,180. So there's two fair value gaps, or not fair value gaps, CME gaps. And these CME gaps are created from closed positions and open positions on the futures market, okay? And the difference between the time of day, the time the price when it closed one day and when it opens the next day, what the price starts as. Okay, now CME gaps also have a tendency to get filled out. They don't get left behind forever. And so when we take a look on our chart here, we've got just a handful of these. Okay, so it's important that we understand that there's a CME gap all the way down here at 9,735 to 9,925. There's one over here, as I said, the 20 to 21 and the 30 to 34. 34 to 35, sorry. And so we are at some point more than likely going to fill out the CME gaps. The question becomes, are we going to 35 before we go down to 20? Or is 35 going to get left behind in the same way that we saw that this one down here got left behind at $9,000, right? And, well, is it a coincidence that 𝗕𝗪𝗪𝗧𝗧 theory allows us to look at this and say, that CME gap down there could potentially get filled out? So a little bit of kind of caution here, right? I want us to be in a bull market, but the data doesn't really give me a lot of confidence to think that we are. We've got a choppy, corrective market going up here. Okay, so there is no trend from an 𝗕𝗪𝗪𝗧𝗧 theory point of view to the upside here. This is all corrective. And so if this is corrective, i.e. corrective in terms of 𝗕𝗪𝗪𝗧𝗧 that is short term, then we should be thinking about the trend that was before. And the trend, unfortunately, was to the downside. And to the downside, it may continue. So, we've got a lot of things to kind of be thinking about. We've got a lot of fundamental things happening in the economy that are not positive. We have a lot of concerns in terms of who is actually holding Bitcoin and who is actually removing Bitcoin from their portfolios. And this is, unfortunately, retail investors holding and buying, and large multimillionaires and billionaires and institutions that are not holding. And so as a result, we have to be quite cautious with the fact that smart money is leaving and dumb money, unfortunately, being retail, is holding. It never ends well. So ultimately, on this macro scale, we are concerned. We're concerned that price may come down and wreck a lot of retail investors. But on the flip of that comes massive opportunity. Okay, so with these kind of downward price pressures, or with these fundamental things, whether it's Coinbase being sued, whether it is Binance being sued, and these delistings and the banks preventing people from onboarding, and the fact that we've got recessions happening around the world with inflation that is really high, mortgage rates that have doubled, people's fixed-term mortgages are coming to an end. People are trying to downsize their houses because they cannot afford to live in their existing homes. And these are problems that are not necessarily present right now, but present will be present in a few months, and that might actually compound selling pressure because people are going to need funding at some point. And as such, I think we're going to see a bit of a housing crisis, and we're going to see potentially people looking to sell whatever assets they can in order to keep their houses and keep the roofs above their heads, keep food on the table for the families. And I think as such, we should be experiencing a lot more selling pressure, and that is the opportunity. You should act like an institutional investor. We should be buying the opportunities that are in front of us when they present themselves. So preserving capital, preserving funds ready for when those scenarios happen is kind of key here. Now, that becomes difficult if you can't onboard, so you have to steadily, slowly onboard over a period of time. Put it into stablecoins that you trust, whether that is 𝗕𝗔 stablecoin on the ADA and Cardano ecosystem, whether that is USDT if you want to, whether that is going to be held in USDC. Choices are yours. Where you hold the stablecoin will also be a risk that you need to consider. Do not hold these things on exchanges. That's just an unnecessary risk in my opinion. Instead, get yourself some kind of hardware wallet. We like Ledger. Despite the nonsense and the noise that we're hearing about backdoors, none of it is actually factually true. I still use Ledger every single day. Links to Ledger are in the description down below, and that will remain to be true until there's actually something that I can find in the code that says there's a backdoor and my private keys are being leaked. I know what it is that I hold. It's called a hardware wallet, and it is hardware, okay, and which means it's only connected to the computer via a cable, and when it's connected, that is when I enter my codes, which basically authorize transactions. No one can access my seed phrase if my device is not plugged into the computer, for example, right? But I'm not going to go down that rabbit hole again. Ultimately, I think we've got some bearish times for Bitcoin. I'm not ruling out the possibility of a surge to the upside though. I still think that CME gap at 34 to 35,000 is very juicy, and we could potentially see that occur before we actually start to run. We can see the idea of a bull flag on our weekly time frame, okay, which could basically be what allows us to get to that particular area. Okay, so here we can see we have ourselves this idea of a bullish flag here, which could be our break upwards towards that kind of $35,000, which would happen to coincide with equilibrium, and equilibrium here could reject the price, bringing us down into those fair value gaps later. Okay, we could basically hit the first CME gap up at 35K, and then come down, grabbing out both the 20K one and the 9K one. It'll be interesting to kind of see how it does play out, but for now, the market is yet to decide which way this is going to go. So caution a little bit here. Not going to trade this one until we have a bigger, clearer direction, but for the most part, my expectations are on a bigger macro. Unfortunately, Bitcoin probably has to come down. I'm going to leave this video right there. If you found it useful and informative, smash the like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one though, guys, have a fantastic day.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to risk your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.